Cryptocurrency is one of the hottest topics in the world today. Millions of people are investing in it, spending it, mining it. It seems like everyone wants a piece of this new money pie. But what is cryptocurrency? How does it work? And why should you care? Well, that's what we're here to find out. Let's take a look at the history of cryptocurrency. The history of cryptocurrency can be traced back to the early days of the internet. The idea was that if people could use computers to transfer money electronically, then they should be able to use them to transfer value as well. In 1998, two cryptographers named Weisel and Davin published a paper on how digital cash could be used on the internet. However, their system required a trusted third party to guarantee transactions. This meant that the system was not truly decentralized and could be vulnerable to attacks. So the idea of cryptocurrency remained just that, an idea. In 2008, however, everything changed. This was the year that Satoshi Nakamoto, who may or may not have been a person, published a white paper on how Bitcoin would work. Unlike previous attempts at digital currency, Bitcoin was truly decentralized. This meant that no one person or entity controlled the currency. Instead, it was controlled by the people. Bitcoin was also based on cryptography, which made it extremely secure. If someone tried to counterfeit a Bitcoin, they would be caught very quickly. The other thing about Bitcoin is that it was limited. There would only ever be 21 million of them. This scarcity makes Bitcoin valuable because people know that if they buy some now, they will be hard to get in the future. On October 31, 2009, the first Bitcoin software client was released and the first block of Bitcoins were mined. A few weeks later, on January 9, 2010, the first ever Bitcoin transaction took place when someone bought 2 pizzas with 10,000 Bitcoins. At the time, this was worth about $40. Today, however, it would be worth over $500 million. Over the next few years, Bitcoin grew in popularity. By 2013, there were over 12 million Bitcoins in circulation, and the total value of the network was over $1 billion. However, the price of Bitcoin is notoriously volatile, and it crashed to below $200 per coin in 2014. But since then, it has recovered and is now worth over $40,000 per coin. While Bitcoin was the first cryptocurrency, it certainly won't be the last. In fact, as of February 2021, there were over 10,000 different cryptocurrencies in existence. Some of these include Ethereum, Ripple, Litecoin, Cardano, Chainlink, Bitcoin Cash, Cosmos, Binance Coin, Tezos, and many more. These cryptocurrencies are all similar to Bitcoin, but each has its own unique features. For example, Ethereum is a decentralized platform that allows developers to build applications on top of it. It was founded by Vitalik Buterin in 2013 when he was only 19 years old. Ethereum is the second largest cryptocurrency by market cap behind Bitcoin. Ripple is a cryptocurrency and payment protocol that was created in 2012 by Ryan Fugger. It is used by banks and other financial institutions to send money quickly and cheaply. Litecoin was created by Charlie Lee in 2011. It is very similar to Bitcoin, but transactions are confirmed much faster. Cardano is a cryptocurrency that was founded by Charles Hoskinson in 2017. It is named after the famous mathematician and cryptographer Gerolamo Cardano. Chainlink is a cryptocurrency that was created in 2017 by Sergey Nazarov and Steve Ellis. It is used to provide real-world data to blockchain networks. Bitcoin Cash is a cryptocurrency that was created in 2017 as a result of a hard fork in the Bitcoin network. It is very similar to Bitcoin, but transactions are cheaper and faster. Cosmos is a cryptocurrency that was created in 2014 by Tendermint Inc. It is used to connect different blockchain networks together. Binance Coin is a cryptocurrency that was created in 2019 by the Binance Exchange. It is used to pay for fees on the Binance Exchange. Tezos is a cryptocurrency that was created in 2017 by Arthur Brightman and Kathleen Brightman. It is named after the famous French mathematician and writer André Gide. There are many other cryptocurrencies out there, but these are some of the most popular ones. So which cryptocurrency is right for you? Well, that depends on what you're looking for. If you want the most popular and well-established cryptocurrency, then go for Bitcoin. If you're looking for something with a little more potential upside, then Ethereum is a good choice. If you want something cheap and fast, then Litecoin or Bitcoin Cash may be a better option. Ultimately, it's up to you to do your research and decide which cryptocurrency you want to invest in. Just remember that all investments carry risk, and the cryptocurrency market is especially volatile. So only invest what you can afford to lose. Now let's talk about how cryptocurrency works. As we mentioned earlier, cryptocurrency is based on cryptography, which is the study of secure communication in the presence of adversaries. Cryptography is used to create a public-private key pair. A public key is like a bank account number. Anyone can see it and use it to send cryptocurrency. A private key is like a bank account password. Only the owner of the cryptocurrency knows it and uses it to authorize transactions. When you make a transaction, such as sending cryptocurrency to someone else, your public key is broadcast to the network. The other person's public key is also broadcast so that you can verify that they have the funds to cover the cost of the transaction. The transaction is then verified by multiple computers on the network. Once the transaction is verified, it is added to a block. A block is basically a group of transactions that have been verified but not yet confirmed. The block is then added to the blockchain, which is a public ledger of all transactions that have been confirmed. The process of verifying and adding blocks to the blockchain is called mining. Miners are rewarded with cryptocurrency for their services. The amount of cryptocurrency they receive is determined by the difficulty of the mining. The more difficult it is to mine a block, the more cryptocurrency miners receive. So now you know what cryptocurrency is and how it works. But why should you care? Well, cryptocurrency has the potential to change the way we do business. It can allow us to make transactions without the need for a middleman such as a bank. It can also allow us to access financial services that we would not otherwise have access to. For example, people in developing countries can use cryptocurrency to save and invest their money even if they don't have access to traditional banking services. Cryptocurrency can also make it easier to do business across borders. Transactions can be made in cryptocurrency rather than having to convert one currency to another. This can save time and money, and it can also reduce the risk of fraud. Of course, there are also risks to using cryptocurrency. The price is highly volatile, which means that you could lose a lot of money if you're not careful. There are also risks of theft, and there is also the potential for regulation. Governments around the world are still figuring out how to regulate cryptocurrency. This could lead to more opportunities in the future, but it could also lead to restrictions. Overall, cryptocurrency is an exciting development that has the potential to change the way we do business. Do you use cryptocurrency? Have you ever invested in it before? Tell us about your experience in the comments below. We would love to hear from you. Also, before you go, don't forget to like this video and subscribe to Danny Crypto channel so that we can keep making great videos for you. Thanks for watching.